The Managing Director, or D. Ram Reddy, the Managing Director at Balaji Amines, joins us on the show. Mr. Reddy, hi, good to be speaking with you. I just wanted to begin by discussing the earnings. I know it happened a couple of weeks ago, but just taking a leaf out of that, the overall volume was healthy. We have seen margin and PAT improvement as well. What's the outlook looking like for FY25 now in terms of what could be the margin profile as well as the overall volumes that you're expecting?
See, overall volumes, there should be minimum 10% growth if you compare the year-on-year basis. And according to me, the bad patch has gone for our company. The last 2-3 quarters went very bad because of the destocking by the Chinese companies, and the raw material prices have gone up, and the market for our end user end was not good. So those things have started improving, and due to which we have seen almost 60% growth in the margins in this quarter. And going forward, we have a lot of expansions going on. One is that methylamine plant is about 45,000 tons plant, which is coming in the stream by end of December. Along with that, dimethyl ether, which is again first time in the country, which is alternative to the LPG coming up. And apart from all these, the one best thing is that we are coming up with a solar power park, which will be commissioned by the end of this financial year, which will take care of entire power bill of all the plants. So all this, looking into all these positive things, we definitely should be in position to maintain 20 to 23% of the EBITDA margins on the standalone basis.
Sure.
Also growth, also we can see the revenue from the current thing to around 2,000 crores for the current financial year. And next financial year, we are aiming for the 3,000 crores.
Okay, so 3,000 crores is what you're aiming for over the next couple of years. Volume growth of 10% in FY25 with a volume growth with a margin of around 22 to 23%. But you talked about how worse seems to be over. Talk to me a bit more about that. This first 1.5 months of this quarter, how has it panned out and how's the pricing now? Because you talked about the destocking issue and the Chinese competition. How's the pricing and overall first 2 months of this quarter?
Yeah, this offtake started improving. The people from our end user side, they started buying the raw materials, and even the prices have also improved our end product prices, which will help us in improving the margins. I think that we should be in a position to maintain what I said, that 21 to 23 with the base last 1-2 months also. It looks like the same.
No, but Mr. Reddy, I understand you're also looking at commissioning that electronic grade DMC plant this year. Can you tell us, A, what's the timeline for that? And I understand this is perhaps going to be used in the EV supply chain. What kind of revenue potential do you see from this stream specifically going forward, let's say 2 to 3 years out?
Yeah, see, actually this plant was commissioned 7-8 months back. And assuming that these battery manufacturers will start their plants, but because of their delay in their end, it has taken time. Our battery grade will commence in next 4 months. And from that time, that depends upon the EV battery manufacturers, like 4-5 companies are there in the pipeline. The moment they start, we being a first manufacturer for these products, along with the NMP and these carbonates like dimethyl carbonate, methyl ethyl carbonate, all these carbonates together will definitely give more than 200 to 300 crores additional revenue in coming 2-3 years.
Mr. Reddy, have you made any tie-up with the likes of Exide and Maharaj, or other ones which are actually getting into this business? Have you made an actual tie-up with them?
We are in discussions, a series of discussions. We have signed almost 2-3 companies. We are in the discussions. The moment we kickstart, we are given the samples also. So 1 or 2 companies have taken the samples also. So the moment they start their production, then our actual results will see.
Fair enough. And I think there was a bit of a chatter, Mr. Reddy, around the IPO timelines for the specialty chemical business. Could you clarify on that? Where does that stand?
I don't have any news as of now. First of all, we want to start the new expansion in the unit 2 of this Balaji Specialty Chemicals. We have lined up total 750 crores expansions in that in the phase manner. First manner about 300 to 400 crores, which is all cyanide based products. First time in the country, we'll be definitely having very good news you will hear. Maybe in next 9 to 10 months, the plant will take some shape. We already acquired the land, papers submitted to the environmental clearance. After that only, maybe in the next year, you will hear something either merging or maybe the IPO or whatever, maybe the board will take the appropriate decision.
Please, it's not imminent in this financial year. Maybe next financial year it will come for board for consideration. That is when you will decide. Could you also talk to us about what the overall demand and pricing pressure in amines and amines derivative products has been? Because that's again something the street has been talking about. And your hotel business, what's the plan with respect to that? Is it just an ancillary or this is something which is part of a business for you? How do you see this hotel for you?
See, actually, we have started as a one and only as a single property. We are not going to do any other new properties. But in this property, since we have done some basic infrastructure is there, we are adding 40 rooms. If you see the our bottom line, the hotel has added almost 11 crores cash profit this year, which is very good. If you compare with the overall results of the company, that has given very good support. So looking into that, since we are already operating more than 80 to 90%, we are adding 40 rooms in the existing hotel. No further new hotels, but in the existing hotel, since already a lot of infrastructure is available, so we are adding 40 rooms, which is costing about 30-35 crores.
So not looking at expanding, it's pretty much status quo and it's been doing okay. Thank you, Mr. Reddy, for making time and speaking with us and laying out the roadmap for future growth. Numbers for Devyani International have just hit my screen and I'm looking at the consolidated earnings. On a total revenue basis, it's been quite a bit of an improvement. 1,047 crores is what the top line is versus 755 crore in the year gone by. But on the profitability front, it is not as impressive because there seems to be a bit of a loss this time around that has come their way. I'm just going through the numbers right now. So yes, the profit attributable to owners of the company stands at around 7 crore loss versus 60 crore profits. We will list out those numbers, but the stock has actually taken quite a bit of tumble. We had seen that in the case of Sapphire as well. The growth wasn't as impressive because there are still continues to be demand challenges. The management did tell us that they're expecting next 6 to 8 months to be a bit slow. Let's continue sticking with the a Devyani chart as well and see whether there's any recovery or not. Because while the revenue growth is pretty decent, I think it's the margin and the loss that the street will take notice of. And that's the reason that stock is coming under pressure. Do remember there's an exceptional item. So that's the thing we should flash first on the ticker, that there's a 42 crore exceptional loss which has come their way. And I think that's the reason the number is looking like a loss. So we'll wait for more details to actually emerge because there seems to be some adjustment as far as the numbers of Devyani is concerned. And we'll wait to get more details on that one. Let's quickly head into a very short break.
If you like this video, then like, share and subscribe to ET Now.